Hello, this is the tradesight Forex market preview and international economic data roadmap for the week beginning Sunday, the 5th of July, 2015, and ending Friday, the 10th. Hope you had a good trading week. I'm recording this still technically with 1 day left in the week because I will be on the road on vacation this week. So there still is Friday, but it's a U.S. bank holiday heading into the Independence Day weekend here in the U.S. So we'll have no trade calls, and unless something happens major in Greece, I would expect it to be fairly uneventful in Forex with the banks closed here in the U.S. So we're going to go ahead and assume that nothing happens there and take a look at the charts and take a look at what's coming next week, kind of get ourselves ready for that and go from there. So here's the dollar index daily chart, and you can see it didn't do much this week, kind of made a range on Monday, and that was it for the week. As you'll see when we look at the individual pairs intraday, we're still between the green and red static trend lines that have formed from the last two 9-bar startup phases on the count there. Nothing spectacular to look at. We went to half size this week in our trading, partially because I'm feeling like we're hitting those summer doldrums, and partially because of the situation in Europe and Greece in particular. That can cause some spikes in the market, and it certainly did, and we were glad we were half size this last week. Hopefully it doesn't last too long. Here's a look at the euro dollar, kind of rolled over towards that red static trend line and didn't do much this week. Here's a look at the pound dollar, a little more negative this week. Came in on Wednesday. Here's the Aussie dollar. Again, we're talking about this level. This key red line is obviously the static trend line. That's the key support level right now. It's not the lows from April. It's the static trend line. There's a difference. However, if we do crack that and crack the lows, you would expect to move down. That's a base breakdown. So keep an eye on the Aussie for that, just like what the New Zealand did. Here's the New Zealand dollar. Broke in May, at the end of May, under that base, and it's been on the move ever since. So the Aussie could be a candidate for the same type of a move. Pound yen was especially flimsy this week, didn't do much at all. All right, let's take a look at the 30-minute bars for the week in the euro dollar. Now keep in mind this is the week itself, and it started on Sunday with a gap down and came back up and filled the gap, and then has been pretty narrow ever since. Nothing much to see there. Here's a look at the pound. Pound did pretty much the same thing. Remember, we got an unusual gap because of the situation in Europe. And so, again, look how flat this action was. I mean, this is a great week to have gone half size. I think we called it pretty much perfectly from that perspective. So let's go ahead and move on. There's not much to look at from an intraday perspective, and we will focus on the data that's coming out this week. We've got the vote on the Greek bailout is on Sunday. We've got the MI inflation gauge out of Australia. Japan's got leading indicators in the morning. German factory orders, Halifax HPI, Switzerland's CPI, Europe's retail PMI. We've got housing equity withdrawal out of the UK, final services PMI in the US in the morning. This is all on Monday. Canada's got their IV PMI, a non-manufacturing PMI, labor market conditions index here in the US. Going to the evening, AIG Construction Index out of Australia, and then Tuesday they got a Bank of Australia rate announcement at 12:30 a.m. Eastern Time here. Switzerland's got their unemployment rate, German industrial production, French trade balance, manufacturing production, and industrial production out of the UK, 30-year bond auction. We got trade balance out of the Canada and the US. That's one of our big three each month, so we would be half size ahead of that anyways. And I suspect we'll be half size for a couple weeks here now. JOLTS job openings here in the US, the IBD tip economic optimism number, jumping to Tuesday evening current account and bank lending out of Japan, economy watcher sentiment out of Japan, building permits out of Canada, annual budget release out of the UK. We've got crude oil inventories an hour into the stock market here in the US on Wednesday, and the 10-year bond auction that afternoon. Minutes from the last Fed meeting come out at 2 p.m. Eastern Time, and consumer credit an hour after that here in the US. We've got core machinery orders out of Japan, M2 money stock, and then we've got the unemployment rate and the employment change out of Australia that night, along with the Chinese CPI and PPI data, 30-year bond auction out of Japan. Moving on to Thursday, German trade balance, preliminary machine tool orders. UK's got a rate announcement, Bank of England, at 7 a.m. Eastern Time on Thursday. Canada housing starts and NHPI. Unemployment claims, that's the weekly number out of the US. Natty gas, 30-year bond auction here in the US. PPI out of Japan, home loans out of Australia. Going into Friday, consumer confidence. There's no U.S. data at all on Friday. Consumer confidence out of Japan, French industrial production, new loans out of China and money supply, Italian industrial production, trade balance out of the UK, unemployment data out of Canada. I guess there is one number. It's the wholesale inventories here in the U.S. Not a big deal. So we'll be looking out for that trade balance number on Tuesday. Obviously, what happens in Greece will be a factor. I don't see too much else to worry about. So we will go from there. If anybody has any questions, you can always find us in the lab and we will help you out. Have a great trading week. Charts as usual brought to you by eSignal.